Good evening. This is the Elliott wave update for the S&P 500 for Tuesday, April the 12th, 2022. I'm sure many of you were exactly doing what I did this morning. When you got up, you grab that cup of coffee, you come in, you turn on your screens, you get your computers going, and suddenly you look. What are they doing up? 200. What are they doing up 250? What are they doing up 275? Watching what was happening, knowing that the CPI number came out prior to me sitting down at the computer. And I was a little bit stunned. So I had to go search to see, well, what was that CPI number? Comes in at 8.5% inflation. I'm like, oh, wow. That's so it's moved up a half a point. And they think that's a good deal. So I went searching again. Expectations were for a higher inflation rate than what they saw. And it just made me chuckle because it makes me think, my God, are they just really that desperate to find something to buy it on, to try to pull everybody back in, to try to do whatever they were trying to do? In any case, the market continues to perform as I think it should. In other words, what I discussed the night before is what played out. What surprised me was the height and the speed of wave two, of this little tiny wave two that we put in. Not so tiny, but on the chart, pretty small. And as I left it last night, that I thought the decline too small to be all of minute wave three, right? This is minute wave three, the startup. If this is where we ended it up last night, I thought, too small. So they brought it down overnight to, what was that low, 43.86, 43.82 before the number came out. So they did bring it down to the next level. But I thought even at 100%, minute wave three, no, it's going to be bigger than minute wave one. And so I would only count this as likely sub-minute wave one. Well, this is exactly what happened. Here we have sub-minute wave one and another second wave going much further than I expected it to under the current conditions and the wave position where it sits within this decline. But sure enough, that was the folly in my head, and it did pull out, but it's a wave two. Not a four, a wave two. So we have, this is the completion point for intermediate wave two, the start of wave three. We have minor wave one of intermediate three, minor wave two of intermediate three. Now we start to subdivide. Now we have minute wave one of minor three. So it's a one of three of three. That's where the starting points of those third waves are. Then we get another wave two. And it comes down again. Now we have sub-minute wave one of three, of three, of three. Now, each time it is kind of doing what I believe. So we finish minor two, it starts to fall off the cliff. But it finds a ledge, it stops, it rallies back up, subdivides again, falls off that cliff, finds a ledge, stops, rallies back up, and then starts to fall off that cliff again. So each time the response to the rally is the same: sell, solid, quick, down. And so the characteristics remain in force for this larger intermediate wave three to be in force now, versus an alternate view that I have carried and continue to run in conjunction with this one, that we could stop. But again, what we just got again begins to lessen that and put the preferred status on what we're counting right now and in the way we are doing it. So what do I think can happen from here? Yes, we're getting a little bounce. We had a solid drop, but I expect a little bounce, maybe down, an additional little bounce, and then we start to accelerate again, moving lower. Now, the market step by step by step is realizing inflation is serious business. The Fed is behind in how they want to deal with it. They either have to catch up or the market needs to catch up with reality. Regardless of what the Fed is doing, I know that everyone talks about don't short the Fed, don't misjudge the Fed. Well, right now they're all thinking that, well, we're still going to stick to that 1 3/4 over 7 different raises, one of which has already occurred. So 6 more. That, if we look at the bonds, just is not gyrating. The bonds are talking a much larger, many more increases. We're looking at 2 3/4, 3 3/4 onwards. And it's not filtered through yet. So quick to jump to run on, oh, it came in less than expectations, does not and essentially mean a thing to that larger downside, which is now rolling. So again, each time we rally, it comes back and goes, thank you, boom, 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 boom. So when we get these wave 2s, it's just another opportunity for people to sell. Because then we go, boom, 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 we fall. We rally up, boom, 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 we fall. We rallied up today, boom, boom, we fall. So the pattern remains consistent. We may get a bounce. I believe, again, this one took me by surprise. I would not be expecting another one. And it's gone down and put in a new low, which means that this is done. We don't make new lows below where we just popped from because it can't be. It's the next wave. It's the start of a subminute wave 3, a continuation of a minute wave 3, a continuation of the minor wave 3. So what we're entering into is 3s of 3s of 3s. So I think minor 3, subminute wave 3, of minute wave 3, of minor 3. So what was that? 1, 2, 3, 4. We're in a subminute wave 3 of a minute wave 3 of a minor wave 3 of an intermediate wave 3. We've got a lot of 3, 4, 5, 4, 5, 4, 5 to do. That's the stair stepping that's going to take to get us down. The series of 4s and 5s. So we're going to get a lot of these little rallies, but I think we got right now, what we're confronting is the strongest part of this decline. So we should have a little bit of a slide further than what we did today. Nice start off of that reversal, off of that top, but I think we get more, and then we start 4s, 5s, 4, 5, 4, 5. Now, ultimately, using this, these are these inside or this even further to the left Fibonacci. 1.618 intermediate wave 3 will be 1.618 times the length of intermediate wave 1, most common at 3488. I'll round it up. That's where I think the intermediate third wave stops. Then we get another 4th wave and another 5th wave down on an intermediate degree before we get down to that primary A, which I believe will start to move us. Oh, I gotta go out even further. 3, 4, and a 5 on the intermediate degree. Well, we're definitely going to be breaking below 4101. So that comes in. So we're looking again. They're down for wave 3. We get a 4, and then the 5th. I was going to try to put that up, but I'm not able to just yet. But I'd be looking at going out to the weekly. We run a very high possibility of the intermediate third wave finishing down here, a 4 and a 5 to finish the first intermediate degree all the way down. And that would be a primary, either primary 1 or primary A. So depending on how far we get, I'm looking for primary A or 1 to be somewhere just above 31.98 with potential to drop us down to the primary A, or even the cycle A, down at 21.75. So there's a lot more downside yet to come before we get a much stronger rally, but there's going to be plenty of rallies in between. So I went out there a little bit on that one, so sorry. So back to what we need. First, we're going to get that move down to at least probably 42.95, but ultimately I think we start to drop and we'll be looking at 41, and then we're definitely slipping underneath and getting down below to 34.87 to complete intermediate wave 3. All right, I'm going to end it there. Tomorrow, I do expect some more slides, but then we start our sequence. Don't forget, it's a stair-stepping 4, 5, 4, 5, 4, 5, 4, 5. We have 4 of them. We have 3, 4, 5, that's 1. Then we have that. 3, 4, 5, that's 2. 3, 4, 5, that's 3. And then 3, 4, 5 is the 4th. Okay, so I'm going to end it there. Continue to trade smart. Use the moving averages. They actually are now aligned to continue lower. And use the Fibonacci, use the Elliott. Our next update will be on Wednesday, the 13th. Come on. Jesus. H.